Good morning, traders. This is an update on my market open day trading strategy that I've been trading now since June 17th. This is focusing on mid-cap stocks, which tend to be lower risk and also kind of follow the typical day trading patterns a little bit better than, say, the riskier low float small cap stocks. So we've been trading this since June 17th. It's July 9th right now. If we look at the P&L during that time period, although we're not trying to make money off of this strategy yet, we're just collecting win rate data. We're only trading with one share, so the P&L is not really reflective. Even if you multiplied it by my full position size, it's not really going to be reflective of the real strategy when we use full position size. But you can see here, SPXL is a swing trade. The rest of these are all day trades, single share day trades. So if you subtract that number from this number, you can see that even though we're just test trading with one single share, we've still made like $2 off of these trades. Again, that's not the point. The point is to collect data. That just goes to show you it doesn't even have to cost you any money to run these test trades. And even if we were losing money, it wouldn't be a lot of money just testing one single share. So let's take a look at the plan, and I'll show you the important things that I've added to the plan this week. So right here you can see number 4 and 5, restart screener between 9:30 and 9:35 multiple times. That's something that I screwed up on this week on one specific day where I did restart it maybe once, and then I just kind of got lazy and didn't restart it. So I always have my screener open on my laptop. I'll show you the screener. You're looking at my desktop right now, but I have this open on my laptop, and then I organize this list by volume. And right at the open, you'll see a bunch of new stocks pop up into the screener. But I think with all that data coming in, it takes a little while for things to catch up. So the best thing to do is to just shut down Webull and restart it. So I have this open on my laptop, and I'm just doing that there. Then I could keep an eye on the charts on my desktop, which is what you're looking at right now. So the next thing is don't preload your charts with stocks from the pre-market. So on this one day this week, I don't remember which day it was, maybe Tuesday or Wednesday, I had this screener up, and this was during the pre-market, so before 9:30, and I was looking at the percent change during the pre-market, and I noticed one stock, went up like 12% or something like that, maybe 20% in the pre-market. And that was the highest out of all the mid caps. So I threw that on my charts ahead of time, and that made me kind of focus on that stock and think, okay, this thing has got a good chance of doing something. And I was kind of fixated on it. And that's also the same day that I wasn't restarting my screener because I was fixated on that one stock. And I ended up missing out on some really great opportunities. That one stock ended up doing nothing and stopping me out on a trade or two. I think 2 trades I got stopped out on that stock. And that was the day that Newegg was really running, and I missed that because I didn't restart my screener. I wasn't looking at my screener. I was looking at that one stock. So this is a really important lesson. Do not preload your charts with stocks from the pre-market because you're going to be vested in those stocks. You're going to think, okay, those are the ones I need to focus on, and you're going to miss out on other opportunities. If you're a day trader, I really don't recommend coming up with a watch list before the day starts because it really doesn't matter what happened the day before or what happened in the aftermarket or pre-market. All that matters is what's happening during the time period that you're trading. So if you're trading the market open like I am, you should be focused on the stocks that are trading at the market open. There's a whole bunch of traders that don't trade at all during the pre-market. I would say the pre-market has 1/10 or less the volume that the market open has, probably much less than that. And so all of these traders are waiting for the market open before they begin trading, and they may be trading off of fundamentals or something else, news, whatever, and it may have nothing to do with what's been going on in the pre-market. So you'll often see stocks coming out of nowhere that we're doing nothing in the pre-market. Yes, sometimes the pre-market stocks do something, but you're going to catch those too because you're watching your screener at the market open. So that's the point with number 5 there. And then all this other stuff I think is pretty old, or at least a week old or more. But I read this plan every single day, so I'm still trading all of this stuff exactly how it says. So I'm just going to scroll through this slowly. Just in case you're not familiar with this, you can pause the video and you can read all of this stuff. Look for stocks that are running that day. This is basically my screener criteria right here. And then this is a reminder, there was a stock that I traded on June 21st that was just not a good trade, and I put a screenshot of it on the chart. Whenever you see this big gap up in the pre-market, just to stay away from trades like that, because those just are very unlikely to work out. So here's my criteria for taking trades. You can read through all that stuff. This actually came into play on a trade yesterday. I traded an ABCD pattern that went into consolidation, and I moved my stop loss level to the low of that consolidation, and the trade worked out, and it made the trade more valuable because of that. And then that's pretty much it. Everything else here is all old stuff, and there's the ABCD pattern. I like to look at that every single day. So I read through this chart, I read through this plan every single day before I start trading. And the last thing I'll show you, I show this at the end of my live trade recaps, but here's the spreadsheet as it is July 9th. So we started trading this on June 17th. You could see that first week or two, the number one trade, the very first trade that I took, the results were pretty poor, but I've continued to do basically the exact same thing. The only one that was kind of an anomaly is this RAVN trade. I won't take a trade like that. That was that one that I showed you on the plan with the big gap up in the pre-market. But other than that, all of these red trades here, they're all the exact same setup, all the exact same criteria that I'm taking during this period here, where they're all green. And this is why, if your plan makes sense logically and you've seen results in the past, all of this trading plan is based on stuff I've been trading for over 6 months now. So it's not brand new. It's not something I just came up with on June 17th. But this iteration is new. So anyway, I just continue to trade the exact same thing, look for the same criteria, the same trades, and now all of a sudden everything is working out. So this is where that law of large numbers comes in that I talk about. And if you want to test that out, you can just flip a coin, and you'll see that if you continue to flip a coin about 100 times, there's going to be many periods in there where you're going to have 5 or 6 heads in a row or 5 or 6 tails in a row. And that's exactly what this is. When you see all of these red trades, that doesn't mean the plan doesn't work or the strategy doesn't work. I'm just in one of these weird periods, these kind of anomaly periods where nothing is working out. Of course, there's maybe other reasons like what's going on in the market, but the main thing is, we're trying to trade off statistics here. So we just have to continue to do the same thing until we get to 100 trades to find out whether this works or not. So right now we've taken 33 trades, so we're 1/3 of the way there. Making progress slowly but surely, but time and patience is a huge requirement for day trading. If you don't have either of those, then you're not going to be a successful day trader. You could see here's my win rate of each single trade day, and then the average of all of those days right here. Break even is 33%, and this is my win rate of all of the trades that I've taken, including the error trades and the trades that I would no longer take moving forward. So I've won 15 out of 33 trades, so that's the win rate. So even with all those bad trades and error trades, I'm still profitable because break even is 33%. If I remove the error trades and the ones that don't meet my plan anymore, the win rate goes up very high to 57%, almost 58%. That's way above the 33% break even. And then the average of those two numbers, which may be more realistic going forward, is 51.5%. And then if I only have taken 3 trades, and this includes all of the error trades, if I've only taken 3 trades instead of, I was going to take up to 10 trades at the beginning of this plan, but if I just stop after 3 trades, this is the win rate, 53.57%. Again, break even is 33%. So the results are looking very promising so far. Yes, the mid-cap stocks offer lower risk trades, therefore lower reward. You can see my return on investment on these trades is right here in this column. So at the very high end, I've got one that's 4.3%, but the average is only 0.23%. Now that includes the red trade, so that's why that number goes down so low. Probably a better way to look at it is to just look at the average of the trades that actually win to see what the potential wins can be. And then the same thing over here. This is on trade number 2. You could see the average ROI is a little higher, 1.23. Again, that includes the losers. And then there's trade number 3, return on investment. So this looks a little bit more even, more averaged. So everything is about like 1.8%. So the average of all of those is 1.16%. But anyway, So yeah, the mid caps have a lower reward potential, but also lower risk. So you can take many more trades without blowing up your account. And if I find out that these mid caps are more reliable as far as they follow their patterns more often, and I can achieve a profitable win rate, then I'd rather take these lower risk trades, knowing that over time I'm going to make money. Where with the small cap, low float stocks, it was very hard to get above that 33% break even. I was usually slightly below, slightly above, so it just wasn't very reliable to trade this plan and to trade this strategy with the low float, small cap stocks. So that's why this plan is centered around these mid caps. Anyway, hopefully this video was helpful to you. If it was, hit the like button. If you haven't subscribed, please do so already. I also have a Facebook trading group by the same name, Trading Armor, where you can download the spreadsheets, the trading plan, all that stuff, the 2-hour calculator, everything. So let me know if you have any questions about this plan. This is what I'm going to continue to be trading this coming week, and we'll see what the results are at the end of next week. Have a great weekend. Stay safe. And as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.